Hey guys, welcome to the Pot Seat. As you can see today, the CPI data came out, and let's just get right into it. We got a good CPI data reporting of zero point 0.1, which was great to come out, and it's right before the big FOMC meeting, which is going to happen tomorrow at 8:30 a.m. Eastern Standard Time. Now, if you're looking for a house and everything, this CPI data is probably good news for you guys because it could mean the possibility of the Fed pausing on the rates. So is it gonna cut rates? Some analysts are saying yes. Most analysts are saying it's gonna be a pause on the rate, including JP Morgan, Bank of America. Citigroup is actually saying that the Fed should continue on its rate hike of 0.25 basis point. uh, so the thing I want to bring up to you right now is that the CPI inflation is still up 4% over year, 12 from the last 12 months. And all items less like food energy index rose by 5.3%. The energy index is what really helped it go down, which decreased by 11.7% because you have to remember gas, gas, like gasoline, your house energy, electric bills were all high during last year because the Russia Ukraine war and all that scare. So basically, if you're a regular average Joe and you're going to the grocery store, you're seeing, hey man, eggs still cost a lot, groceries are still high. I'm not really seeing inflation go down, but you got to realize that food and energy did grow, but the overall energy index is what really put the CPI data in a good point. Now, when looking forward to it, uh, what do you think, Lex, is going to happen tomorrow? Do you think they're going to raise the uh rates, or are they going to pause it?
I think they're gonna pause it, but they should go up one more time just to make sure that inflation is not gonna keep going up.
So they're
Uh,
saying that they might skip this rate hike and then they might raise it in July. But I mean, and then you got to see what the July CPI data comes in for June, and that would probably give you another scenario to look into. But
I'm
if
really
you're
still seeing I'm still seeing prices going up. So if they're
correct,
still going up, they should go up at least one more time or maybe two. But this uh time coming, they should go up 0.25.
we also have tomorrow PPI coming out, which is the producer price index. So we're gonna see how people that create the parts, create the food and all that. So you see how they've been hit. That's going to be very interesting to see too. Now, keep in mind the Fed has already made the decision, but they keep it. They release it later, which is going to be sorry. I apologize. Please do not listen to me when I said 8:30 a.m. in the morning. It's going to be at 12:30 p.m. I'm sorry. The PPI is going to come out at 8:30 a.m. in the morning, and the FOMC meeting decision is going to come out at 12:30 p.m. So going forward, when you see the data of the PPI, it's not going to be included in this rate hike. So we might see volatility throughout the day, especially this week. As you can see, probably options have been very high. Uh, People are, still risking that, the market's going to shoot up because of the rate pause. We'll see how it plays out. Right now, the market has just been trajectorying as like a bull run is happening. So, going forward, if inflation is going down, is disinflation going to be a topic which could probably lead to bringing the market down and affecting earnings in the quarter three and quarter four?
Maybe because when everything goes down, they're probably gonna have to sell more to see the same numbers. You know what I mean? So that's going to be a way where the company's going to have to kind of, and that's what the companies are there for. I mean, I don't get nervous about companies not because inflation is going down, they're going to lose profit. That's they should know how to handle that if in case it happens.
Yeah, the
But
whole
you know,
objective of the Fed is to have a soft landing. Uh, but if in case there's a major slowdown and inflation starts going up again, that is going to be what's scary, and that's going to lead to stagflation. And that's when it's going to go 1970s, 1980s all over again, and that's when rates are going to be like probably like in the double digits, and that's going to really have a slowdown not only in America but probably around the world because now everything is like globalized.
yeah, that's true. We will see what happens. Hopefully it's going to be good news for everybody,
Yeah,
businesses and citizens.
last week there was a uh like a surprise Canadian rate hike of a quarter point basis, and it tumbled the whole market. Only a couple of stocks like Tesla still survived and had a green day, but that was like a little shock to the markets, which sent markets just going down. So 98% of the market is like saying that we're gonna have a pause in rate hike. Now, if for some reason we do not have pause and we do increase rate hikes, see a little like see red tomorrow.
I think at this point is damn if you do, damn if you don't. Because if you go up on rates, people who's buying cars, houses is gonna, they're gonna feel it. But again, if you don't go up on rates,
Then you get hyperinflation and
yep.
stagflation. So
So this is like either way, it might hurt somebody in the process. But again, just let's go ahead and hope that whatever they do is gonna be the best for everybody. I mean, there's gonna be losers and winners. That's a given. But I hope whoever loses is not gonna lose big. That's the main thing here. Whoever loses doesn't lose big.
all right, guys. Thank you for watching, and hopefully you guys have a good investing day tomorrow. Comment and see what you think the Fed is gonna do.
Yes,
Take care
sir.
and
Well,
bye bye.
thank you. We will see you in the next one.